represent to you about our group member. We have 4 members in one group. Myself, Muhammad Hizat Firdaus bin Rahim, Muhammad Alif Hanif, Muhammad Najmi, and Muhammad Luqman Hakim.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Najmi bin Muhammad Nasir. So today I will present to you about segmental reporting for our chosen company, which is Sunway Berhad. First, we move to the company background. So Sunway Berhad basically is an industrial conglomerate. Sunway Group is founded by Tan Sri Datuk Seri Dr. Jeffrey Chia in 1974. So the group's conduct is business in property, construction, hospitality, retail, manufacturing and trading, leisure education, healthcare, quarrying, building materials, commercial and real estate investment trust. So, its major real estate project in portfolio includes Sunway City Kuala Lumpur, Sunway City Iskandar Puteri, Sunway City Ipoh, Sunway City Valley City. This group operation in many countries such as China, Australia, Vietnam, Thailand, Indonesia, Cambodia, Myanmar, also in the UK. Factors to consider having a segment reporting. There are 4 factors that we identify, which are first, nature of the product and services. Second, nature of the production processes. Third, type of customer of the product and services. And lastly is method used to distribute the product or provide the services. Alright, we go through one by one for the factors to consider having a segment reporting. Alright, first, for the nature of the product or services, it refers to the type of product or services. For the Sunway Berhad, the principle of activities is investment holding and provision of management services. Next is nature of the production processes. The nature of production processes are based on the business product. It refers to how the products are produced or the service are provided. Alright, for the next factors, which is type of customers for the product or services. As for Sunway, there are 6 types of customers, which are first, local and international customer. Second, employees. Third, governments and industry affiliations. Fourth, local communities and NGOs. Next, shareholders, and the last one is suppliers. Alright, for the last factors, which is method used to distribute the products or provide the services. It refers to how the service being delivered. For example, Sunway Healthcare, they deliver the excellent medical outcome. For property development, they develop innovative residential, commercial and retail properties. Next, for construction, capable of tailoring fully integrated and cost-effective solutions. Next, we move to types of segment in Sunway. So as you can see, this all is all the types of segment in Sunway Berhad. So they have construction, in property investment, property development, others trading, manufacturing, quarry, healthcare and investment holding. Alright, for the chief of decision making and their responsibility, we have a few big names to introduce. One of them is Tan Sri Datuk Sri Dr. Jeffrey Chia, the founder and chairman Sunway Group. This one is Lee Chuan Seng, CEO of Sunway Quarry. Next we have Chan Hoi Choi, CEO Sunway Malls and Theme Park. And this one is Datuk Dr. Lee Wen Keng, CEO of Sunway Healthcare. Also we have Datuk Irgoh Chai Kun, the chairman Sunway Construction. Chief of decision maker, they're responsible for the day-to-day operations. They're also responsible for proposing and develop company strategy. they make a decision about allocation of overall resource and assessing their performance. They also ensuring the executive team give appropriate priority to provide reports. Next, the process to identify reportable and non-reportable segment. So, quantitative threshold test, they have two tests, which are 10% threshold test and 75% threshold test. Operating segment that do not meet the 10% threshold test requirements are not classified as reportable segments. So, they should be combined and disclosed under all other segments category to make sure they meet the requirement of 10% of threshold test. Alright, we move to the 10% threshold test workings. So this is the working for our 10% threshold test, and I choose the revenue basis. Alright, we will go to the next slide and we will go through the report. Alright, we go through the revenue test calculation. To get the revenue test calculation, we use formula the total revenue of each segment divided by combined revenue of all segments multiplied by 100%. For this reporting segment, we use the financial statement for the year ended 31st December 2021. Alright, as you can see the table, we choose 6 operating segment, which is property development, property investment, construction, quarry, trading and manufacturing, and investment holding. Alright, for property development, after calculate, we get 13.3%, which is exceed the 10% requirement, so it can be a reportable segment. For property investment, after calculate, we only just get 7.3%, which is lower than 10% requirement. So it cannot be reportable segment. So to summarize, there are only 4 segments that can be reported as reportable segment, which are property development, construction, trading and manufacturing, and investment holding. And the other 2, which is property investment and quarry, they are not classified as reportable segment because they didn't meet the 10% requirement, so they cannot classify as reportable segment.
So now we continue about 75% threshold. So what is 75% threshold? The combined external revenue of identified reportable operating segment must be exceed 75%. What happen if not exceed 75%? So if 75% threshold test does not meet the requirement, then the additional reportable segment should be identified even if the segment fail the 10% threshold test until at least 75% of the total external revenue included. So now we look at the working of 75% threshold. So we look at the table that I provide to you, the working of 75% threshold test. All the 6 segments of somewhere have in the table, which is property development, property investment, construction, trading and manufacturing, quarry and investment holding. From that, we have 4 segment reportable segment and 2 non-reportable segments, which is property development, construction, trading and manufacturing, and investment holding are reportable segment. Meanwhile, the property investment and quarry is non-reportable segment. So how we want to calculate? The formula is total external revenue of reportable segment divided by combined external revenue all segment multiplied by 100. So when we calculate the amount, we got 80.12%, which means it meets the requirement and greater than 75%. So since Sunway Berhad meet the 75% threshold, the reportable segment will remain the same and no need to identify additional reportable segment. So now we look at the new segmental report of Sunway Berhad. So when we calculate and we identify the 4 reportable segment, which is property development, construction, trading and manufacturing, and investment holding, while we identify 2 non-reportable segment, which is property investment and quarry. So when we calculate, we got the new total revenue and net profit for the year. At the conclusion of segmental reporting, so we look at the advantages first. First, it will help organizations to utilize their resources. Second, it can be the company profitability predictor. And third, useful for investor, whether the investor want to invest or not in the company. So we look at how about the disadvantages. First, difficult to allocate the cost. Second, will be data manipulations. Third, the information misinterpreted by financial statement user. And fourth, time consuming.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Lukman Hakim bin Muhammad Asri and I will be presenting about MFRS134 Interim Report. First one, basis of preparation. An interim financial report is a financial report that contains either a complete or condensed set of financial statement for a period shorter than an entity full financial year. For Sunway Berhad, they prepared this interim report in accordance with MFRS 134, Interim Financial Reporting and other MFRS issued by MASB. Sunway Berhad also followed all the requirements in paragraph 9.22 of the Bursa Malaysia Securities Berhad listing requirement. The interim report will be presented together with its audited financial statement for the year ended 31st December 2021. And Sunway Berhad also used a discrete method approach for its interim report. It is the approach in which each of the interim period is treated as a distinct accounting period. Like annual financial result, the same principle and processes are used in determining interim net income. Under this approach, any outlay such as for advertising, repair and maintenance would be expenses in the interim period in which the outlay occurs. 2 accounting policy that used in the Sunway Berhad. First accounting policy is MFRS 116, Property, Plant and Equipment. MFRS 116, Property, Plant and Equipment are tangible assets that are held for use in the production or supply of goods or services for rental to others for administrative purpose and are expected to be used during more than one period. In Sunway Berhad, all items of property, plant and equipment, excluding right of use asset, are initially recorded at cost. After initial recognition, property, plant and equipment, excluding right of use asset, are stated at cost less accumulated depreciation and any accumulated impairment loss. Depreciation is computed on a straight line basis over the estimated useful life of the asset, such as building for 2%, renovation for 4% until 33%, plant and machinery for 5% till 20%, for motor vehicle 10% to 30%, and equipment, furniture and fitting, which is 5% to 33%. So the second accounting policy, MFRS 138, intangible asset. So tangible asset is an identifiable non-monetary that has no physical substance. In Sunway Berhad, all intangible assets are initially measured at cost. After initial recognition, intangible assets are carried at cost, less any accumulated amortization and accumulated impairment losses. Intangible assets with finite life are amortized on a straight line basis over the estimated economic useful life. So, For example, software. Software that does not form an integral part of the related hardware is treated as intangible asset with finite life, and it is amortized over its estimated useful life of 3 to 5 years. And then operating right. Operating right relate to the exclusive right granted by a third party to operate and manage the park and ride facilities in some way. Operating right has finite useful life and is amortized over its estimated useful life of 30 years. And last but not least, data cost. Data cost represent the database of corporate information used for the provision of credit reference, credit rating and other related service. Data cost has finite life and is amortized over its estimated useful life of 5 years. Type of interim report. In the interim report, the minimum content it should include 5 sets of financial statement for the current and comparative prior report information. The 5 statements that should be presented in the interim report are the condensed statement of profit or loss and other comprehensive income, condensed statement of financial position, condensed statement of cash flow, condensed statement of changes in equity and notes to the interim financial report. Interim reporting is the reporting of the financial result of any period that is shorter than a physical year. Samuel Berhad prepared his interim report 4 times quarterly, starting from 1st January to 31st March for each first quarter, followed by the next quarter, which included a 3-month financial record.
Now, we will take a look at the period for the current and comparative of each statement prepared by Sanwe Berhad. For statement of profit and loss and other comprehensive income, the current interim period consists of 3 months starting from April 2022 to June 2022. This period is to be compared with April 2021 to June 2021. While for the cumulative period, the period is 12 months starting from July 2021 to June 2022, and this will be compared with July 2020 to June 2021. For the statement of financial position, it is as at 30 June 2022 for current interim period, and its comparative is as at 31st December 2021. For statement of changes in equity and statement of cash flow, the current interim period is 6 months, which starting from January 2022 and ends in June 2022, while the comparative is from January 2021 to June 2021. As for the adjustment, the first adjustment is on earning per share. The basic earning per share in the individual quarter for the current quarter ended has increased from getting a loss of 64 cents loss in quarter 1 to an earning of 68 cents in quarter 2. Basic earnings are calculated by subtracting preferred dividends from the net income and dividing by weighted average common shares outstanding. This adjustment is due to the increase of earnings for the period attributable to equity holders of the company from taking a loss of 1,414,000 to gaining earnings of 1,558,000. There was also increase in weighted average of ordinary shares. And for the second adjustment, it is on income tax expense. The tax expense for the current year quarter for quarter 1 is prepaid of 58,000, has increased to 526,000 in quarter 2. This adjustment has been made as in quarter 1 the amount was negative, resulting in deduction in the statement of comprehensive income for income tax expense. However, in Q2, there has been deferred tax which caused an increase in the income tax expense of the statement of comprehensive income.